Hello, this is MSP, and today we're going to talk about how to make big profits day and swing trading using MSP ALGO Implied Volatility Gauge to help time trades. Okay, so we have a new page here, and it is called Stock Market Implied Volatility Gauge Log. So we're already on this page. But the first thing we need to do before we go over this application is define what volatility is, okay? Now, obviously, this is the implied volatility gauge, but there's other types of volatility. So, what exactly is volatility? There are 5 types, and basically, volatility is the pace at which prices move higher or lower and how wildly they swing. These can be prices of just about anything. But in this scenario, we're obviously talking about the stock market, okay? So what are the 5 types? The first is, we got what we call stock volatility, and that's the prices of some stocks are highly volatile. So it basically is given the volatility of that stock. For example, we got what we call momentum stocks, and like a Google or Amazon, they have a higher volatility for the stock versus a Coca-Cola, let's say, for example, okay? So as a result, investors want a higher return for the increased uncertainty. So that's why higher volatile stocks move. They swing up and down a lot more. Whereas the Amazon may move $30, $40, $50 in a month. Coke may move $2, okay? So there's a big difference. And it depends on that type of investor. Okay, then we got historical volatility. As its name suggests, historical volatility is how much volatility a stock has over the past 12 months. And then we have implied volatility, which is what our gauge is. And we'll go further into that application and learn how to read it. But implied volatility describes how much volatility that option traders think the stock will have in the future. You can tell what implied volatility of a stock is by looking at how much the futures options prices vary, okay? That's what they say there. Obviously, it's a lot more difficult than that. Okay, but they're just trying to sum it up in a nutshell. And then we got the market volatility, okay? So that's where our gauge is a combination of the market volatility with implied volatility. So it's for the entire market. It is not applicable for a stock. It is not applicable for an option. It is for the entire stock market as a whole. Okay, so they say market volatility is the velocity of price changes for any market. That includes commodities, forex, and the stock market. So volatility is like a roller coaster. 1 minute you think the stock's going up, and then the next minute it's going back down. Like you're going up on a roller coaster, seems like it's finally going to break out and reach some sort of level, and then it's dropping like a rock. So here's an example of volatility. We have the stocks dropping, and then it's a pop, and this isn't actually that, it's kind of volatile. Well, we can see a bit of volatility here. Okay, so 1 minute it's chopping like a rock, the next minute it's popping to the top, next minute it's dropping like a rock. Okay, so that is what volatility is, and in essence it means it's not really trending. It's in this scenario we could see that it is whiplashing between the ranges of 3,000 to 2,700, which is the futures. So we understand what implied volatility is and market volatility. And we understand that volatility is the movement of price changes rapidly. Okay? That is the key, rapidly. Okay. So that's what MSP ALGO Stock Market Implied Volatility Gauge Log does. It monitors the volatility of the stock market from an implied perspective. Okay, so let's look at this page here. And we know that it is under MSP ALGO Stocks and Options Playbook, and it is right there. Okay, so when we look at the page, we can see we have a filter. It says show all, daily only, intraday minute. So we have two time frames. We have the daily time frame and we have the intraday time frame. Okay, daily time frame is for swing traders, or to get a higher level perspective of how the day did, where intraday time frame is more so smaller moves within that day. Then we have a start date, a start time, an end date, and an end time. Okay, so MSP ALGO application is doing analytics on the stock market every 10 minutes. So what that means is that every 10 minutes it will analyze price action and give feedback to the trader. Okay? So in order to know if a stock is going to go up or down, it is good to measure more than one transaction. Someone could buy and the stock drop. Someone could sell and the stock pop. You need to know as a whole or as a collective what is going on. So that's where the 10-minute increments come in. Okay? All right, so based on that, we can assess whether there is more buying versus selling, or selling versus buying. So that's important to know. So when you are looking for doing a search, you know you need to put in 10-minute increments. Okay, it has to be in 10-minute increments so you can get your results back. So it's always going to be a zero, like 9 o'clock, let's say, to 1600 is normal, or 9:30 is normal market hours. 0400 is when the stock market actually opened up for administrative purposes, and it actually closed at 2000 Eastern Standard Time. So the stock market is open at 0400 to 2000 Eastern Standard Time. Okay. All right, so that's pretty much how you do a search here. We know we could change our date to whatever we want, but we already have a search that we did, and it's saying filter show all. So we have a filter of the 3rd, and we could see that we have some columns here. Let me try to blow this up a little bit if possible. Okay, so we have a start date, an end date time, MSP ALGO, implied volatility change, time frame, alert message, description, and anticipated price action. Okay? So these are in ascending order. And you could search one day, or you could search multiple days. In this scenario, we're searching for one day. So if you want to do a daily only, we should see one transaction because we only did one day. If you want to do an intraday like we had previously, we know we're searching between the hours of 0400 to 2000, and those are the transactions. So it will include the that's for just the intraday. Okay, before we actually go into into reading this page, let's look at what type of alerts there are. Okay? So we have what we call options premiums decreased, option premiums increased, shortcoming, buy puts, avoid new swing trades with call options on initial alert. And then we have high premiums, avoid new swing trades with call options. Now, in this particular scenario, we're talking about if you're buying options for a stock. The futures doesn't have the same sort of implied volatility attached to their options, okay? So what is this implied volatility, and how does it affect the options? Well, if the stock is going to move, the volatility is, if the market is expecting a move, the volatility is going to go up. So that means that there's going to be more demand. Okay, so that means that the premiums are going to go up. So if, let's say for example, this stock's been dropping like a rock. This stock dropped like a rock, okay? So on the 30th, it dropped like a rock until the 6th of August. All right, we didn't know this was the bottom. But as this is dropping, the premium on the option is going up, okay? So as price is dropping, because there's more demand for protection, okay? So it's just like supply and demand. The more demand for something, the higher the price goes up. It's the same exact thing for options. And that's what a lot of traders aren't aware of. So what ends up happening is they may say, oh, look, I got the bottom. This may be the bottom, right? I think I want to go buy, I think I want to go buy me a call. Let's say if it was SPY. and they buy that option, but they paid a really steep premium for that call option. Okay, because what's going to end up happening is that as price go up, there's not as much demand for protection, so the premium goes down. So let's say you paid $1 for a call option. As the premium goes at max price, because it was $1 here, as this stock popped, now your call option may be 80 cents. You see what I'm saying? So your trade worked, but your call didn't move because the premium went down. So let's say out of that dollar, 40 cents was premium attached. So now that the premium attached to that option is only 20 cents. So your option went down even though the stock went up. And I know a lot of traders, that's why you have people that say they bears, because it's easier to trade as a bear because the premium goes up. So you have two things going up. You have the direction that you chose that is going to drop. That's making the option go up. And then the demand for that option is going up as the price drops, so the premium is going up. So that's pretty much, so our application is monitoring the stock market as a whole, and we're monitoring the volatility, implied volatility of the entire stock market. Okay, not a specific stock or option. Okay, so let's go back to the page. So now you got an idea of the different types. So when I was talking about the options premium decrease, option premiums increased, and then we have other type alerts. Okay, so when the option premiums decrease, this is warning that there's going to be a slingshot coming. Okay, so it says fueling the tank in process for the trip. So normally this means this is at the preparation stage before the slingshot alert. Okay, options premium increase. Normally, these normally come after a slingshot alert. When these come after slingshot alert, you know that next move is up. Okay. Shortcoming by put. This is the beginning of a slingshot. This is the actual slingshot right here. Slingshot alert. Okay, there go your slingshot alert. This is warning of a slingshot coming. This is the actual slingshot alert. And it says shortcoming, load the boat. And then we got the high premiums, and this is, it says avoid call options altogether. It doesn't matter what you're trading, because it's thinking this is what? Their territory, avoid swing calls. Okay? And then not applicable means that there was no alert for that day. So normally it's okay to buy calls. Okay? I'm not saying it's not okay to buy calls. What I'm saying is it's not okay to swing calls unless you know exactly what you're doing. This is how most people lose money trading options, because they don't have any clue how to trade them. Okay, so as you can see, we do have 3 columns. So this is the anticipated price action. When premiums decreased, is dropping to support to pop. So normally that's a short. Then we have when the premiums increased, popping to resistance to drop. when the short coming. Buy puts, avoid new swing trades. This is a little different. On the first initial alert, normally the anticipated price action here is pop to drop, then pop. Okay? And that's a slingshot attack. And it says that normally back-to-back short coming alerts within 2 to 3 days mean price near a bottom, okay, on the second consecutive alert, and the stock price will reverse for long, okay? And then we have the bear territory, and the price action for that is drop, and that's it. Okay, so you could really take trades just based on this, but that's not what it's designed for. What it is designed for is, if you are a swing trader, it's designed to let you know that if you are long, your long position may be in jeopardy. You may need to get out of that position. Okay? So what does this do? I've learned that it does a few things. Number one, it'll let you know when you're near bottom. Okay? It'll let you know when you're probably near a top. You're near a top, and price is going to jump. It'll let you know what the type price action is going to be in the future. Okay? So I'm going to give you some examples. But let's look and see. So we pretty much went over what is in the grid here, or the rows, and what it's saying. So we could see that this is the intraday, and we could see that it's saying drop, pop, pop, drop. Intraday is going to be moving too much, so for our example, we're just going to look at it daily, and the best way to back test is to look historically. Okay, so we're going to look historically at so we're going to backdate. I have day only, and I'm saying give me everything, right? And of course it's just one. I think that'll automatically, once you select daily, it'll automatically put the right times for you. Okay, all right, so we could see that on the 1st of August it's saying drop, 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 pop. Okay, so it's saying that high premiums, avoid swing call. Is saying you are in bear territory. Anticipated price action, drop. Swing trade version, daily time frame. So we know that on the 1st of August, it's saying that you should not be swing trading calls. So let's look at the chart, and let's go to the 1st of August and see what was going on. Okay, so you see how we could define tops. Okay, so let's go back a little further in time, because we see that that was a top, and let's see if what happened slightly before then? How long did it take to realize that that was a top? My computer froze here. Here we go, I hope. If not, we're gonna... Hopefully it... Alright. I need to go do this quick because I don't have time for this to do this video again. Okay, so okay, so here we got it's saying a slingshot was coming, and a lot of things was going on. So it was trying to say it was going to drop on the 30th. It was warning about a drop. So here it was warning that you may need to get out of your calls. And then the next day it dropped. Okay, so you see how it found the top. Now let's see what the next alert was. So the other alerts was just saying bear territory, bear territory, bear territory, bear territory, repetitive alerts. So there was no guessing for the trader. The trader was warned way in advance of even the red candle showing up, okay? All right. Now, on the 8th, we finally got a new alert. It says increasing volatility. Option premiums increase. Huge candle coming. Spike. Pop. Popping to resistance to drop. Okay? So that's what this thing is trying to say. So let's look at the 8th. See what that looks like. Okay, so it's saying that on the 8th, it's saying it's popping to resistance to drop. Okay, so so let's read that again so we can understand what it's saying. Okay, it says popping to resistance to drop. That means that that's what price should be doing now. Price is popping, okay? And where is it popping to? It's popping to resistance to drop. How do we know? Because the market's telling us that. Based on MSP ALGO Stock Market Implied Volatility Gauge, is telling us that. Think about this. Let's do this. Okay, I'm not going to worry about that. But anyway, let's just do like this. As we could see, let me try it one more time. It was fine. I just put it on the wrong thing. There you go. Now, we can see, and you notice that this did not say call a bottom at all. You notice that? It didn't say, and it didn't give that shade that the slingshot alert. All this is saying is price is popping to resistance to drop. And if we look at this chart, it looks quite bullish, don't you think? And who knows, this thing gonna drop. So this is on the 8th. And we know that we shouldn't be going long on the 9th, right? Because we need to make sure that that thing didn't hit resistance, right? Okay, so what happens on the 9th? So we could see that price did drop. All right. So now on the 12th, we got our slingshot attack. So we see that on the 12th, so let's look at the 12th. So here goes the 12th. And so we got the alert on the 12th. And it says, anticipated price action. It says shortcoming, load the boat. Okay, load the boat in trader lingo means load up with your stock or options. In this case, we think it's going to be a short, right? So what is this app telling us? It's telling us that the anticipated price action is pop to drop, then pop. It says this is a slingshot attack. Okay? So, normally back-to-back shortcoming alerts within 2 to 3 days mean price near bottom on second consecutive alert, and the stock price will reverse for long. Okay, so we're expecting this to pop, and we want to short the rip, right, and load the boat. That's what the thing telling us. Of course, we'll use our other tools. This is just measurement the volatility, but it's acting like an alert. But you need to look at your stock that you're going to trade. This is just your insurance policy to assist the trader so that they could stay on the right side of the trade. Okay? So that was on the 12th. So it said expected price to pop, right? So we could have went long for that pop if we wanted to, or we could just wait. And then, so it said load the boat. So we went on and load the boat because we looked at our, we looked at SPY and realized it was bearish, and we looked at our implied volatility gauge, and it was agreeing, and everything was good. So at the end of the day, we short before the market closed, right? Because we know we're going to pop all day and act bullish, right? Because it told us. Pop to drop, then pop. Slingshot attack. And what is a slingshot? We will go over that. I'm sure everybody know what a slingshot is. Yes, the thing that you played with probably when you were little, that sling and fling. Okay? So, and I'll show you why we call it a slingshot. Okay, so we loaded the boat at the top near 295, and because we bought near the end of the day, and it capped down to 282, 294. I mean, not gap down all the way there, but it hit like 282. All right, so that was a good short, wasn't it? And all I'm doing is looking at this. Am I supposed to use MSP ALGO Implied Volatility gauge to take trades? No. What does it do? It helps you take trades after looking at alerts, okay? Trading alerts, okay? Because some stock's going to be a little different. You need to find a stock that is in sync with the message, right? Those are the type trades you'll be looking for. Okay, so now we got another alert pop on the 13th. So these alerts come out. I think about 9-10 o'clock, because we got to wait for the market to close, and then there's a lot of things running behind the scenes, and it may take until 10. Sometimes it'll be 8:30, 9 o'clock. Okay, it just really depends on the data. So these alerts, the daily, run after market close. So when you get this alert, you're actually going to be looking at the next day. Okay, so so now this is on the 13th, so we're looking on the 14th, right? So on the 13th, so we're looking at the 14th. It's telling us that because we had to load the boat, and then this came out the next day after that. We were already short, and then so another alert came out. So that kind of told us we need to get out of our short, right? Because it's going to pop to the top. And then we got another slingshot alert within that 2 to 3 day time frame. So that kind of confirms what? Normally, back-to-back short-coming alerts within 2 to 3 days means price near a bottom on second consecutive alert, and the stock price will reverse for long. So we think we're near a bottom at this point on the 14th of August, okay? So on the 14th, so that alert actually count for the next day. So that was exactly the bottom. See? And it never caught the bottom here. But it did here. Okay? So these are excellent for swing traders. You see how I was just able to trade that hypothetically and know what the market's going to do. And this is SPY, so this is kind of like a whole bunch of stocks. So so that's probably why it's so in sync. But if I was probably going to a Netflix, it could have been doing something a little different. Let's look at another stock. So Netflix was kind of like chopping and doing its own thing, right? So a great stock to use is like a SPY, which is has 500 stocks and is more likely in sync with this gauge, okay? And that's pretty much how you use it. So we could see again on the 23rd, load the boat, short coming, and that's probably near bottom again on the 27th. So let's see. So you see how advantageous it is. This is the holy grail for option traders. That is the hardest thing, is to know, one, when's the best time to buy calls and puts. And this thing is very powerful. You can see how powerful it is. It tells you where the tops are. It tells you where the bottoms are. It tells you on this thing popping to the top. Nope, that's not a long opportunity. It's a short opportunity. When it's dropping like a rock, no, that is not a short opportunity. Here, no, get out that short. It's time to go long. Okay? So it's a great tool, and you should always use it if you don't want to be on a roller coaster ride, okay? So that is what MSP ALGO Stock Market Implied Volatility Gauge is all about. And what we're going to do in our next video is we're going to talk about our exciting money flow sequential view and how to find trades. And this is really another really exciting thing to use, tool to use. So you don't really need to use all the tools. I'm showing you a combination of tools you can use to trade, because obviously we have a lot of things. So I'm thinking that with the implied volatility gauge and the money flow sequential historical view, you don't really need anything else, okay? This is going to replace the old day trading bot, okay? All right, so if we get a little sneak peek at this baby here. So we got some exciting things, and this is really, really exciting. So I'm dying to go over this, and I'll go over it in the next video. What's exciting is we have an algo chatter bot that's communicating to the billion-dollar algos that's running the market, and the institutional algos that are trading and communicating the best entry points and alert opportunities. So this is where you actually get your trading alerts. So we'll go over that as well. In the next video. And unfortunately, this app, I realize it loved to freeze, and it's very frustrating, but there's nothing I could do. All I could do is wait, and hopefully it will unfreeze. I'm VPNing into another server, and that is the issue. But anyway, so we did see how advantageous it is to use MSP ALGO Implied Volatility Gauge. We realized that it could detect bottoms and tops, and it's tradable as well. All right, So thank you. I'm gonna go over to my other computer and try to end this video. But please like and subscribe, and we'll be on to the next lesson soon. Thanks.